But Somit, over to you.
Well, if you look at the textile companies, yesterday most of them had hit an upper circuit of 20%. Indocount, Kitex, Gokaldas Export, Pearl Global, Welspun have an exposure to the US market anywhere between 60 to 70%, and these stocks of these share prices were up anywhere between 10 to 20% in trades. Similarly, Himmat Singha to SP Apparels, they have an exposure of anywhere between 22 to 60%, and here the share prices were up anywhere between 11 to 16%. And when we talk about Arvind, KPR Mills, Vardhaman Textiles, if you look at the revenue exposure here, it's anywhere between 9 to 22%, and these companies are also up anywhere between 12 to 15% in trade. So largely most of this textile stocks did benefit in trade yesterday. But this was on the back of the US deal that has been announced. And before this US deal was announced, and when the tariffs were already imposed on the textile companies, of 50% tariff that was imposed on August 27th, the share prices had not come off massively. Most of the fall was largely sentimental. Himmat Singha had seen the biggest fall of 16.5%, followed by Gokaldas Export 16%, KPR Mills 12%, and the remaining stocks fell anyway. In fact, some of them also ended up in positive, like Pearl Global, that was up 25%. So this clearly shows that though tariffs of 50% was imposed, the impact on share prices was largely sentimental. And if you look at the commentary that the managements had given post the tariffs were imposed, it clearly showed that the financial impact was very less on these companies. For Indocount, they clearly said that the margin impact is just 80 to 100 basis points. For companies like Gokaldas Export, they saw a net EBITDA hit of just 40 odd crore rupees. For Pearl Global, they were seeing that US buyers were seeking discounts to offset tariff impact, and they were recosting their contracts for the next season, but nothing had been done so far, was the commentary that had come in from Pearl Global, and hence the share price also of Pearl Global was up around 25%. For Welspun India, they did witness some lower shipments and lower realizations in the second quarter because of the tariff sharing that they were doing with their clients. For Vardhaman Textile, the fabric capacity and volumes were impacted in that quarter, but not much, because if you look at the financial the revenues, they did not fall in a bigger way because of tariffs getting imposed on textile. For SP Apparels, they had scaled down operations in only one of their facilities because of the tariff disruption. And when it comes to Arvind, they had estimated an impact of just 25 odd crore rupees, which is again just 100 basis points on the EBITDA margin. So financially, not big of an impact had come in, and that was clearly reflecting in the share prices, because none of the stocks were down more than 20%, and whatever share price gain we saw on yesterday's move had largely covered most of it. So what's the way forward now for the textile companies that comes in post the US tariff deal has announced? Now, the way ahead is clearly shows that there were hardly any order losses that had come in, and managements were confident in maintaining their market share and guidance going forward. They also clearly said that managements were also confident that margins will also revert back to their original levels, and that could now happen now going forward, given the fact that tariffs have been lowered to 18%, and Indian textile companies are also now competitive enough to the global or Asian players, and companies were also diversifying to newer areas like Africa, Europe, and Australia as well. Apart from this, multiple FTAs were signed. This is also expected to aid textile companies going forward. In the last few months, India has signed FTAs with Oman, UK, EU, and now with US as well. So these FTAs are also expected to benefit Indian textile companies going forward. Now, if you look at the valuations of the textile companies, most of them are trading at a higher valuation compared to the historical averages. KPR Mills trading at a valuation of 32 times as against historical average of 28. Welspun India at 21 times as against historical average of 16 times. And if you look at other stocks like Indocount, Arvind, Vardhaman Textile, SP Apparels, and Himmat Singha, only Himmat Singha is trading at a discounted valuation, while rest of them are trading at expensive valuation. And if you look at the return potential that is there when it comes to the textile companies, some of them have 30% plus return potential, like Indocount, Gokaldas, and Arvind. Return potential varies anywhere between 31 to 37%. For Trident and Pearl Global, it's anywhere between 20 to 29%. For SP Apparels, Welspun India, and KPR Mills, anywhere between 9 to 18%. Vardhaman Textile is the only one with a lower return potential of negative 13%, but most of them offer good return potential, with 3 of them offering return potential of nearly 30% from the current levels.